It is April 2024. Danny D was good enough to run numbers again for last month, and it looks like we are fully in the spring market. I'm going to let you go, Danny, with overall sales volume leading the way.
Right. Thank you, Rob. So, yeah, as you said, spring has definitely sprung. This is usually what we see, rebound coming out of winter, right? And so that definitely happened this month. We were about 1,849 homes sold last month. You can see that's down just a little bit, just 3% from the same month last year. But if you look at the size of the leap from the February to March timeframe in both of those years, you can see it's pretty significant. This year, we're up 18% month over month compared to where we were in February. So definitely looks like things are picking up. Current supply, we've got just over 1,600 houses that are available and active on the market right now. That puts us at back under 1 month of supplies. But yeah, definitely looks like things are bouncing back.
Yeah, as expected, but that's a really big swing up, a little bit higher, I think, well, similar to the percentages last year. But list price versus sold price, our next metric, I'm pretty sure all these numbers are going to show growth, Danny. So what are we looking at, list versus sold price?
Yep, absolutely. That's definitely the trend. That's the theme, right? And again, compare this to last year. There's a couple of things. So last year, you can see that the rebound was really pronounced there. January last year was the low point. That was also the low point here. But look how big of a jump things made into February last year. That didn't happen as much. It was much more gradual this year. And then going into into March last year, it was equally big, that kind of rebound. We're just getting started. You can see how big of a leap things made here between February and March this year. The average sold price of $378,800 and change. That's a big change from this time last year, right? Things were rebounding last year up to $355,000, right? So just in a year's time, we're up almost $24,000 a month, year over year. You can see also the other notable thing is that these lines have not yet converged yet, but they probably will. We saw that happen last year as well. Right around this time, March, April, you see that the sales price versus list price were almost exactly the same. And that's before things got into summer, where there was a lot more competition. All of a sudden, sold price was going higher on average than list price. I think that that's likely to happen again here as we get into the busier selling months of the summer.
Yeah, we're definitely seeing the seasonality shift. Things are going closer to list price on average. Anything good is still going over list price. We're seeing that consistently. That's been the case all year. Now, the percentage over asking, that's changed quite a lot, at least from the last few months. We don't have comparison on the donut chart, as we call it, but Dana, I know you have those numbers. You're tracking those.
Yep. And definitely, really, all we've seen over these last few months that we've been watching this is the orange, which is the things that go more than 5% below their asking price. That number's gotten smaller. And the green, which is things that have gone 5% or more above their asking price, has gotten bigger. So those are really just traded. The middle section has been absolutely consistent, actually, through the last year. And those are things that sell within 5% above or below their asking. So really, that's just a sign that things are heating up. There's more competition, and things are starting to go more above asking than they were over the previous couple of months.
Yep. And as expected, average days on the market has fallen almost exactly in line with last year, 31 days now, right, Danny?
Yeah, that's the average. The median's down to 7 compared to 6 last year. But the shape of the curve is the same, right? You can see last year things were high. Coming into this month, they really started to drop off, and then they hit their lows throughout the summer as things were really.
I definitely expect that to continue. Price reductions follows that same curve. We're seeing the same, if not identical, drops there year over year. The seasonality is a real thing, guys. Down to, what is it? Sales with price reduction 24%.
Yeah, so under about a quarter of the sales included a price reduction. So definitely same trend. The last big one really is the interest rates, right? You look at where we are this year compared to last year. everyone was already getting adjusted to, wow, we're above 6% at this time last year. We're not that far off now. I know things have changed. I think coming into like today, things are above 7%. So there's still expectation that the Fed will be lowering rates at some point this year, perhaps multiple times. But in the immediate term, things have gone just a little bit back up. Not sure exactly what that's going to do to sales here in the next couple months, but it's a thing for us to watch.
Yeah, we're definitely stronger all around. Rates have not fallen like we hoped they would. I know that that's being adjusted on the fly by the Fed when anytime new numbers come out, inflationary numbers and the market data. One thing that is going up, whether the interest rate goes up or down, the prices of homes are going up. So if you're waiting on this market, you're missing out on this. If you don't already own something, you're missing out on this giant growth of equity that we're seeing across the board. It's a good time to own, get in the game. Earlier the better. So what does this market mean for buyers? It means competition is going to start heating up. You will get more inventory, but there will be way more competition. We've seen this in previous years around this time. There's no reason to expect different. Whether the rates fall or not, prices are going up. So get in the game. We're starting to lose any buyer's advantage that you had over the winter. We were able to get some concessions before. That's going to become less frequent now across the board. So if you're thinking about moving, it's very convenient to move in the summer. Earlier the better, though. And for sellers, Danny, what does this mean?
Yeah, definitely for sellers. I mean, if you look at the past as a predictor of where we go from here, again, the pattern, we've been doing this for a few years now. The pattern seems to persist. Things really heat up in summer. So sellers are in a great place right now to probably command the highest value for their home, right? The highest sales price for the year in the coming months. So things to keep in mind, though, the condition of the house does still matter, right? The things that sit longer are the things that people, frankly, have to put more time, money, and energy into, right, to get them up to the standards they want. So if you're thinking about, listing your home, you should be talking to somebody about what are the upgrades that make sense, what are the ones that don't, right? And just how all that ties back to what you can expect in terms of list price and potential sales price for your home. So yeah, I think this is a great time to be a seller. Our market overall, just in Columbus and Central Ohio, is still supply constrained, right? So we don't have enough inventory to go around. And that's really evidenced by just the volume and the active listings right now. Less than 1 month of inventory is still historically low. That's a very, very low amount. That means there's a lot of people that want a place to buy, not enough that's out there, and the stuff that's good goes really fast. So yeah, I think that's the take for sellers.
Yeah, for sure. It's a seller's market. There's a reason we say that. So, if you're looking to make a move, don't let the rates stop you. I think we're going to be at these rates for a long time, man. As always, thanks for running those numbers, Danny. I think that's helpful. We are into full spring selling season, so keep that in mind going forward. And then we'll see you next month.